also known as foreign exchange or FX, is a decentralized global market where all the world's currencies trade. The Forex market is the largest and most liquid market in the world, with an average daily trading volume exceeding $5 trillion. Participants in the Forex market include large commercial banks, central banks, governments, corporations, and retail traders. The market operates 24 hours a day, 5 days a week, and currencies are traded worldwide among the major financial centers in London, New York, Tokyo, Zurich, Frankfurt, Hong Kong, Singapore, Paris, and Sydney. Trading in the Forex market involves buying one currency and selling another simultaneously. The value of a currency is determined by its comparison to another currency. For example, the value of the US dollar is determined by how it compares to the euro. When the value of the US dollar increases relative to the euro, it means that it has appreciated. Forex traders use technical and fundamental analysis to try to predict the direction of currency exchange rates. Technical analysis involves the use of charts and other tools to study past market data, while fundamental analysis involves studying economic, political, and other factors that may impact the value of a currency. Forex trading can be highly speculative and carries a level of risk. It is important for traders to have a solid understanding of the market and to use proper risk management techniques to limit potential losses. It is also important for traders to be aware of the potential for fraud in the Forex market and to only trade with regulated and reputable brokers.